Hello and welcome back to the channel, where we uncover unique opportunities and educate you on the intricate world of hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a fascinating name that hit our screener, LABT, or Liquid Index Biotherapeutics, Inc. We'll break down what makes this clinical-stage biotech company stand out, especially concerning its incredibly high cost to borrow. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Liquid Index Biotherapeutics, Inc. LABT is a clinical-stage biotechnology company operating in the healthcare sector focused on developing novel antimicrobial products from its bisphosphorin class. This microcap stock currently holds a market capitalization of just $4.01 million. While it operates in a sector ripe with innovation, our focus today isn't just on its science, but on the unique supply-demand dynamics of its shares for short sellers. What is cost to borrow and why it matters? So, what exactly is cost to borrow and why should you care? When someone wants to short a stock, they first have to borrow shares. The cost to borrow, or CTB, is the annualized fee short sellers paid to hold those borrowed shares. Think of it like an interest rate. When a stock becomes hard to borrow, it means there's a scarcity of shares available for lending. This scarcity drives up the CTB fee significantly, sometimes well over 100% annually, because lenders can charge more for a limited resource. A high CTB indicates strong demand from short sellers and limited supply, creating a potentially volatile situation. Why this stock is hard to borrow right now? LABT is flashing bright red on our hard to borrow screener. The annualized cost to borrow fee for Liquid Index Biotherapeutics currently sits at an astounding 776.1%. Chart highlighting CTB percentage, that's a massive premium for short sellers to pay. With an estimated float of only 1.8 million shares, the supply is already quite limited. While we don't have current data on shares available to borrow, the sky-high CTB suggests borrowable shares are scarce. Our internal composite squeeze score for LABT is 42.3 out of 100, reflecting this elevated borrow cost and tight float, even with other factors at play. Squeeze mechanics explained. Now, let's connect the dots to a short squeeze. Imagine short sellers are paying over 776% annually to bet against LABT. If positive news emerges, or if buying pressure simply increases for any reason, the stock price starts to rise. As the price goes up, short sellers start to face mounting losses, especially with such a high CTB eating into any potential profits from their short position. When this pressure becomes too intense, some short sellers are forced to cover their positions, meaning they have to buy back the shares they borrowed. This forced buying creates even more demand, driving the price up further, which can trigger a cascade of other short sellers covering their positions. This cycle of forced buying leading to rapid price appreciation is the essence of a short squeeze. Dilution risk check. Before getting too excited about squeeze potential, we always check for dilution risk, as new share offerings can completely negate any squeeze thesis. We're pleased to report that for LABT, we found no recent dilutive SEC filings like -1s, -3s, or 424 BS in the last 90 days. This is good news, as new share issuances flood the market with supply, often depressing the price and allowing short sellers to cover cheaply without triggering a squeeze. For LABT, at this moment, dilution doesn't appear to be an immediate concern based on recent filings. Recent reverse split watch. It's important to note that Liquid Index Biotherapeutics executed a 1:4-10 reverse stock split on June 22, 2026, which was 49 days ago from today. A reverse split reduces the total number of outstanding shares and, by extension, the float, while proportionally increasing the share price. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the reset price attracts new attention and the reduced float can amplify price movements. While this is a common pattern we've observed in some names, it's certainly not a guarantee, and investors should be aware of this recent corporate action. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you keep an eye on with LABT? The stock saw a modest plus 5.86% gain today and over the last 5 days. However, zooming out, it's down 32.47% over the last 30 days. Today's volume was extremely low at just 82,723 shares, a fraction of its 30-day average volume of nearly 3 million shares. This Xerox relative volume indicates very little trading activity compared to usual. A squeeze scenario would likely require a significant uptick in buying volume to pressure shorts. Remember, a high cost to borrow doesn't guarantee a squeeze. It can also mean short sellers have very strong conviction in their bearish thesis and are willing to pay a high price to maintain their bets against the company. LABT Liquid AIMDEX Biotherapeutics Inc. presents a fascinating case with its astronomical 776.1% cost to borrow and tight 1.8 million share foot. While its recent reverse split history and low current volume add layers to the analysis, the extremely high borrower fee makes it a stock worth watching on our hard to borrow screener. As always, do your own due diligence. If you found this breakdown helpful, please like this video, subscribe to our channel for more deep dives, and let us know in the comments what stocks you want us to analyze next. Thanks for watching, and we'll see you in the next one.